Good morning, everyone. This is Marv Eisen from Timeless Dollar, and today is Wednesday, March 3rd. It's about an hour before the market opened, and this is my pre-market report for today. Starting out with the economic calendar, we see that there are some announcements that I want to call your attention to, and an important one has been released this morning at 8:15. That was the ADP employment report, which came in well below the expectation. The estimate was 225. The employment report came in at 117,000, almost half of what the actual estimate number was seen to be. So that's something that's going to weigh on the market. Also, there are several things that I want to talk to you about in this economic calendar events today. There are three reports by Fed board presidents. The Philly, Atlanta, and Chicago board presidents are going to speak at 10, 12, and 2 p.m. And at 2 p.m., the Beige Book is going to be released, which is the Fed's overall estimate of the economy. So that's going to be something of interest. And at 2 p.m., you might want to keep your powder dry and wait to see what the market thinks about this overall report. Moving along to the Investors Business Daily, I saw the headlines and techs are up. Apple, Microsoft, PayPal, and Square, the payment services are up as well for you stock traders. That bodes well for the financial sector. Moving along to Cnbc, we have a recap of the private payrolls report. This was the reflection of the ADP report, and that's the big news here. Biden announces that vaccines will be plentiful by May, and today, of course, the Senate is going to take up President Biden's COVID relief package, that $1.9 trillion relief package. That's going to be big news, and it's expected to pass, and that will have a positive effect on the market, although today there are still bumps in the road caused by that ADP report. Another troubling headline is right here: mortgage application demand stall as interest rates surge to the highest levels since July. And that was to be expected based on that 10-year Treasury hike that we reported last week. At any rate, the general market news is not bad, but I wouldn't call it good. So today, I think that the market might have a bias to the negative side. Let's move over to the actual Emini. This is the chart from yesterday, the 5-minute chart. And yesterday was a little bit of a tough day to trade. And for those of you who listened to me, took my course, and know how to exercise patience, I think that you'll see why I say that yesterday's stock market was a tough, or rather Emini market, was a tough one to trade. Starting out at 9:30, I've drawn a blue line representing the actual market times from 9:30 to 4 p.m. Eastern. The market started off to the downside, recovered. It's not a spinning top, but there are shadows, significant shadows to the up and downside. So at this opening candle didn't give investors too much of a indication, although it was carried through in the next 5-minute candle. And so if you jumped on over here feeling that the bias was to the downside, you would have been correct. There are 2.5 points between each horizontal line. So 1, 2, 3, possibly I'd call it 3 points that could have been quickly picked up if you waited, kept your powder dry for 5 minutes, and then rode the movement down. But then it quickly reversed, and that was confirmed with the stochastics. Of course, the stochastics is a leading indicator, but it lags a little bit too, although it's the only indicator I use. Take my course and you'll learn why. The rest of the day, the market basically meandered up and down without too many real indications of where to jump on until right here at 11:40. Now, most people don't trade at 11:40, and yet this hammer appearing at the 38.73 level, this hammer was a good indication to hop on to the positive side, and that would have been a ride from 38.74 up to, if you If you felt that the market was going to stay healthy, 38.99, so that would have been a 25-point move to the upside. Tough to know. Probably right over here. If you were really looking at signals, these two dojis would probably or should probably have gotten you off. So call it 38.74 to 38.82. 8 points. Okay, 8 points, but with a clear signal. But again, it was at 11.40. But the move for the day for real traders, if you waited, wait till 3 o'clock where the real market movers show themselves. At 3 o'clock, shares were sold and sold quickly. You'll notice the momentum moves here at 3:15, eased up a little bit, and by 4 o'clock, we ended up at 38.67. So this trade from 38.91 to 38.67 would have netted you about 20 points or so. That would have been a play. So that was my call for yesterday. Yesterday was a tough day to trade, and if you stood in the sidelines and did nothing, that would have been fine. Anyway, this is Marv Eisen from Timeless Dollar. If you're looking for a course that teaches conservative trading, check out my course at timelessdollar.com. Trading Mastery for Financial Freedom. You won't be sorry. And you have a safe day today, Wednesday, March 3rd. And thanks for watching. And I'll see you on my next video.